What's up YouTube, it's Louis here, hope you're all well. Bitcoin is doing crazy things over the last few days with the CPI data release, and we can see that we've actually broken out of this ascending triangle, which is also a double bottom, and we do have a target of about 20k. What is so interesting is that it actually has taken out this 18.6k higher low over here that was actually meant to be as reacting as resistance, and it's taken out, and so we should expect it to be support now. So our area over here in the past, which was this 5-month area of support that we once lost, has now been reclaimed. So what we need to see going forward is actually this being confirmed as support. This is going to be the final nail in the coffin. It does not mean that we are actually 100% safe just yet, because if we're looking on the daily time frame at the 200 EMA, which is this white moving average over here, add this onto your chart, the 200 exponential moving average, we can see by the time that we come up to about the 786, we will be meeting the 200 EMA. It's a little bit high at the moment. I'm just going to redo this target. So from there to the body candle close, and then we put it where it back where it was. Sorry, let's just do that again. From there to there. Yeah, that's correct. On the breakout right there, the target is 20,122. If we were to take the aggressive target from the bottom over here, put that on the breakout, we see a target of about 20,500. So the target is between 20,000, the 7865, and 20,500. Bear in mind that when we usually meet a target's pattern's target, my apologies, we usually tend to create a pattern in the opposite direction, and that would make sense because we're meeting the larger trend direction, which is down, as this is the decided by the 200 EMA over here. So as long as we're below this white line, you can see when we're going above it, you're meant to continue in an uptrend. This is where we had a fake out, and so a fake out means we're not in an uptrend, we're in a downtrend. So if we're in a downtrend means simply low, high, lower low, lower high, lower low, lower high. So you're just going to keep getting these lows that go lower than the last low, essentially. So this is what we should expect after breaking out bullish, meaning that we should continue up. Failing to do so, we throw back into this bearish pattern, so we should lose this low, and we eventually did so over here. Lower low, lower high. This high over here is lower than that one and this one, and so we should go lower, lower high, and then we eventually went lower. So that's why, guys, we're not completely out of the woods just yet. We need to realize this double bottom over here, it's amazing that we've now reclaimed this higher low on the side over here. Going forward, let me just get rid of this. Going forward, we need to hold this higher low over here of 18.6k. So this range over here of 17.6 to 18.6, we need to now flip this into support after meeting this target. So the expectation now is that if in 8 hours and 52 minutes we do actually get this breakout, because we need to realize we haven't broken out just yet, we will go on the lower time frames. But if you want to wait for a final confirmation, wait for the daily candle close to close above the 0618 over here, because you can see that actually yesterday you closed below. So at the moment, this could all be manipulation. We're not certain. We will go to the lower time frames to decipher this, but at the moment, when we're just looking at the daily time frame, we need to realize that an open candle is not a candle that we can make a judgment off. We need to make a judgment off the previous candle, and so the previous candle did actually push above the 618 but closed below 18,946, and because of that, today, if we want to continue up to our technical target out of the double bottom or ascending triangle, we need to see a daily candle close above this price. But further confirmation would be a close above 19,114, because this is the wick high. This is where we got rejected. So if we're pushing through that price where we got rejected, then of course this is bullish, and we should expect continuation to the 20,000 psychological level. But again, beware that the longer term trend on the daily time frame has been bearish, of course, because with the FTX capitulation, we did put a lower low below the 5-month support And remember guys, when we called this bottom, we said the reason this is the bottom is because of this high low. So going forward, we cannot lose this, because if we do lose this, we're going to continue lower and break below this. We had one scare over here, but when that happened, I warned you guys saying it's completely fine. And then on this occasion, because of the scandal with FTX, I said, no guys, this is actually going lower now. This is not going to be short term. I do expect that we're just pumping into these resistances and that we do continue lower. But what was stopping this was the neckline over here of this head and shoulders pattern. You see that we had a shoulder, this massive head and a shoulder, and right over here I told you this is where we need to break out, and because we didn't, I said this ascending triangle over here and this small double bottom is breaking out. And so we are expecting that this is going to be retested as resistance. We did get a close below the shooting star. That's actually a bearish candlestick, but we see the direct next day. Do you see, if we zoom in, it actually took out this wick high. So if I draw across a line across, you can see the body closed above. That's what we need to see today on the daily time frame. You see, because the body closed above the wick on the left, we're going up. And so that is the expectation here. If we close above this wick, we're going up. We'll look at it on the lower time frames. But again, guys, if you're enjoying the video so far, do please share this video to your mates and your family. Please do like and of course comment under the video if you're finding value, or if you've just learned something new today, let me know in the comments below if you just want to have something to share. And of course, subscribe as we're on our way to 5K. So yeah, let's get there as soon as we can, guys. It's the new year. Let's smash this year together. We're going to do more lower time frame analysis at the moment. But yeah, just before we get into that, we can see that we've actually just now formed a daily bullish cross with the 55 and the 20 EMA. So this is just a signal of an uptrend, but it's not 100% safe. Remember, I just told you at the beginning of the video, we need to hold this red area as support. So for the moment, because we've actually pushed through it, I'm going to have to make it green, guys, because it's expected now that this holds as support. So for the moment, we need to anticipate bullish momentum right now. I know we were saying, yes, we're going to go down. This is because we were below. Can you see here? We were rejecting it. But with this push through, remember over here, down here with this double bottom, over here with this W, we're not going to brush through it. We're going to dissect this and see where things actually changed. And so over here we see with this double bottom, we broke out of the neckline. I did actually give you this bullish pattern, but I was saying at the time, we might not be able to get to this target because of the 55, because of this breakout over here and how it's a fake out. This essentially means we should continue with our downtrend, and that's something I just showed you earlier on in the video over here, where we went up in this bull trend and then we fell back under it. We did that over here, essentially. Over here, you got above it and fell back under it. And this was the actual example that I was showing you earlier on in the video. We broke out bullish, it fell back under, and we lost the low. So that's just taking those experiences. We need to say the same here. When you have a fake out, it's usually a sign, okay, we're not bullish, we're going to go lower. So the expectation is a lower low to continue down to this 14K target. For the moment, what we need to do to invalidate this 14K target is a good few things. I'm going to show you guys right now, and then we will eventually go to the lower time frames. But again, do smash the like button on this video. Let's try and get over 100 likes on this, and to try and get this trending on the Bitcoin, whatever you want to call it, search bar. But I'm just going to remove this for a second. We will eventually bring it back. But we can see over here, we had this push up from this low to this high, which I was actually lucky enough to give you this bottom at that moment over here at about 17.7K. We did low out about $100-$200 lower, but regardless, this is the low, this is the high. We are not meant to break through this gold box, and as we did so right here, we're going lower to these targets. We met the first target, and if we want to invalidate the potential downside to the 1618 target at 14K, if you do not want to see 13.7 to 14K, guys, I must say that we need to reclaim this golden pocket, and unfortunately you can see exactly where this golden pocket is landing, directly between the 200 EMA and the 20K psychological resistance. We need to be very wary of this location. This is where I am personally anticipating a rejection. If it pushes through this, do not get too bullish because we have another key area of resistance right here, which was the right shoulder of this old head and shoulders pattern. So left shoulder, right shoulder, sorry, my mistake, left shoulder, head, right shoulder over here. Take out that right shoulder, we're pushing back up to 25k. Beautiful. But for the moment, we're not on that journey right just yet, so we can't be disillusioned of that. We're on the path to do so. We need to break above certain resistances to do so, and that is that trend decider, which is that indicator we must be having on our chart, the 200 EMA. This is something I talk about with my students, and if you want to be a student of mine where you can have all my personal thoughts on the market, a community where every single person in the community is helping each other, we're posting daily results on my Twitter. Make sure you're following my Twitter for daily updates. That is all linked down below. That is where you need to go to message me about starting the course or the mentorship. If you want to do so, hit the link underneath this video. Thank you guys. We'll continue with this, but we need to actually push through this to flip things bullish. It's the golden pocket. So yes, I've made it red just so you understand it's a resistance. Usually we have it orange, but I want you guys to understand this is a resistance. It's a big area, and we've brought it a little bit below the 618 to the $20,000 level. I know this video is getting a bit long, but it has to be detailed, guys. So yeah, we just need to break above that for things to flip bullish. But my anticipation is, because we're breaking out of this, we're just flying into the air with no pullbacks at all. We're just going up day after day, many days without a pullback. So eventually I believe this will die off. The target is just a little bit above 20k, about 20.5, 20 to 20.5k. This is our target, and once we meet this target, my expectation is, because we're going to be running into where the bullish cross happened and we lost it, so this is the bearish location, psychological level, as well as where the 200 EMA will be landing, as well as it being the Fibonacci golden pocket. This for me is just going to be acting as a resistance, and so the level that we need to be seeing held is this green zone that we've just flipped into a green zone. Remember, this 17.6 to 18.6 area. I'll need to see this held as support, and if it can be held as support, this is where we can go ahead and try and break out again. You could be making an inverse head and shoulders here, and so this would be the bullish pattern to take us back up to about 22 to 25k. This is how we get up there, guys. But yeah, my anticipation is when we do run into about 20 to 21k, we're going to stop, we're going to pull back, come back towards about 17.5 to about 19k, as we do see the 786 here. So we have to say that this is going to react at some point. I will add this old previous Fibonacci that we had at the beginning of the video, and you can see that the 618 is lining up exactly with that 786. So it's a key resistance. This is, if we're just looking at the new fibs over here, the smaller ones, this is where we should actually go down, because this is a Fibonacci retracement. So push, exhaust, continue. But if we push through, it's called a reversal wave. Now let's just finish off the video with some quick 15-minute time frame analysis. I hope you guys been enjoying the video so far, so please do like, subscribe, and of course comment and share the video. Turn the notification bell on so you're aware of when the altcoin videos do come out. But we're just going to look at this quick range over here. We've seen that we've just now made a higher high above this wick over here. We're now coming back down to retest it. So will it actually now hold on the 15-minute time frame? If it does hold, we're going up. If it closes back under it, we're coming back down. Let me give you some more important levels, but we want to be looking at the left and at the highest point, back down to here, the lowest point after the highest point, not back down to here. This would be a random fib. This is not how you want to use the fibs. I have a lot of people that have joined my mentorship and joined my course that have been taught to think that the Fibonacci's are used like this. Not at all. When you're measuring a pullback, you're measuring from the top of that pullback to the bottom, and you just wait for it to go up. You have this golden pocket here. It's not meant to go through the pocket. You're meant to actually push into it and drop down. In this case, it went up a little bit more to the 786. It's allowed to do so before falling back under. But when it found support, it's meant to flip it into resistance. You had some bearish candlesticks here, so you're meant to go down. But if you actually see something that's going against what it's meant to do, understand that we're now going to go up. This is what should happen. If you're shown otherwise, we're not doing that. We're doing the opposite. And there's only two ways in this trading thing. It's up or down. So instead of going down when it should, it showed you it's gone up, it closed above it. We're going up, guys. We're going up. And a close above this 1 fib level, as long as we can remain above this. If we close below, we're coming back down to the golden pocket. I need to see this golden pocket held. I don't want to lose 18,870. So if I can hold 18,870, that's the deepest I can go. You don't have to. You can just stop at 18,900, which is 19k. We could just fall back to 19k and then continue up to these targets over here, 19.2, 19.3. If it does pull back from here, it just needs to hold 18.8 and it will still continue to higher price targets of about 19.6k. And we would be, of course, continuing to our double bottom target at about 20 to 21k. Thank you guys so much for tuning into today's update. I know it's longer than usual, but please go ahead and do smash the like button, share it, comment, and of course subscribe. Thank you guys. If you want to, of course, learn this so you can do it by yourself, you will not need my help by the end of it. The community is there to help you. I'm also in the community, but we're all helping each other. There's over 60 people in the community. There's only 10 channel members out of nearly 5,000 of you. Check out those channel memberships. If you want to get the videos out early, get those channel memberships. You just want to support the channel, there's a cheaper option where you get emojis next to you. And of course, if you want to take action on the course or the mentorship, message me on Twitter. Thank you guys so much. Peace out.